Walgreens Boots Alliance, stock ticker WBA, is currently trading at $31.22 per share, and over the past year, this company has been hammered. It is down over 24%. We can see year to date down about 16%, and over the past month, down about 10.4%. Now, when we look at the big picture, the company really hasn't performed much better. Over the past 5 years, down over 50%, and over the past 10 years, down 38.53%. So this company definitely has not performed very well big picture over the past decade. Let's go ahead and look at some dividend metrics. Now we can see the company does have a good starting dividend yield at its current price at about 6.10%. Something that's interesting about this company is the 4-year average dividend yield is sitting at 4.23, and now the current dividend yield is 6.10. But make no mistake, this isn't because the company's been increasing dividends by a large amount. This is because we've seen such a drastic drop in the share price. Now the company does have a good history of increasing dividends. If we come here, you can see over 30 years of dividend growth. But if we look at those dividend growth rates over the past few years, they are very minimal. So the dividends have been increasing, but the dividend increases have been very, very small. So in this video, we're going to be jumping into my stock valuation spreadsheet to see if we can find the intrinsic value of Walgreens. We'll be looking at a few different valuation models like always. If you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. But what we're going to do is we'll come up here and plug in the stock ticker WBA and hit enter. And you can see all of this data is going to automatically load in. Now, like we already mentioned, dividend payout currently sitting at $1.92, which gives them a starting dividend yield of about 6.14%. Now, let's talk about the payout ratio and dividend safety for just a minute. You can see the payout ratio for Walgreens sitting at about 38.21%. So relatively safe. Let's go ahead and dig into it a little bit more on Seeking Alpha. If we click on dividend safety, what you'll see is the dividend payout ratio for trailing 12 months non-GAAP sitting at about 47%. So a little bit higher there when you look at that, but overall it is a relatively safe dividend right now. High dividend yield, but obviously lots of share price depreciation over the past few years. Analysts currently have a target price of $40.57, institutional ownership pretty low at around 60%, and a beta of just 0.71, so you should see pretty low levels of volatility with this company. But let's go ahead and jump into our first valuation, which will be Graham's valuation, a valuation model invented by Warren Buffett's mentor Benjamin Graham to calculate intrinsic value. So you can see the variables we need to plug in is going to be earnings per share. We have a growth rate projection. Now, the growth rate projections for Walgreens are very, very low, which is really going to hurt a lot of the valuations in this scenario, but they just don't have a lot of growth prospects at this moment. So you can see we're projecting a growth rate of just 1.5, which is in line with the analyst expectations. Once we plug all these other variables in, we divide by Y, which is the current yield on AAA corporate bonds. It's actually climbed up just a little bit higher over the past few days. It's sitting at 4.52, but when we plug all this in, we come to an intrinsic value of $37.23 per share. Moving forward and looking at our discounted cash flow analysis, again, you can see I plugged in the historical free cash flow for this company so we can see our year-over-year growth rates, and it has a slight decline of around -2%. Now, moving forward, I'm projecting a free cash flow growth rate of around 1%, so again, pretty low growth, but I'm projecting that growth rate to the future free cash flows of the company and the terminal value, which is the sum of the future free cash flow past the year 2030. I then find the present value of those future free cash flows and add them together. Add the cash and cash equivalents, which by the way, it has doubled since the last time I was looking at this company, but then we subtract out the total debt to get our equity value, divide by shares outstanding, and we come to a discounted cash flow price per share of $47.25, which is actually quite a bit higher than that current trading price. Now, the next valuation that I typically like to look at is the multiples valuation. CVS is a pretty good comparable for this company, but usually when I only have one really solid comparable, I don't think this is the best valuation model. So you can see I did not use it in this scenario. So that leaves us with one more valuation model, and that is the dividend discount model. And the idea behind the dividend discount model is we should be able to value a company based on how much they pay out in dividends and how much that dividend is increasing over time. So what I've done is I have plugged in the historical quarterly payouts for this dividend so we can see how much it pays out each year. This allows us to see our year-over-year dividend growth rates. We can see we have 4%, 2%, 2%, and then just 0.5%. So a little bit of a slowing dividend growth rate over the past few years. Average growth rate of around 2.21%. I'm actually projecting a growth rate pretty much in line with the average, around 2%, discount rate of 8.5, and that gives us a dividend discount model price per share of just $30.13, pretty close to that current trading price. That low dividend growth rate, definitely a little bit of a concern, and will that be sustainable long term is a question we'll have to answer. If they have slowing free cash flow growth, eventually the dividend might get to a point where it's not sustainable, maybe a decade from now. And if you're a long-term dividend growth investor like me, that is the kind of thing you do have to consider. So while the dividend is safe right now, will that be the case a decade or even 2 decades from now? Definitely things you want to think about when looking at any stock. But let's go ahead and jump over to the output tab, and we can see the 3 valuation models we use in this scenario. We have Grams at $37.23, discounted cash flow at $47.25, and dividend discount model at $30.13. When we average all 3 of these together, we come to an intrinsic value of $38.20 per share, with a current trading price of $31.21. And let's say we apply a 10% margin of safety, you could see our acceptable buy price for the company sitting at $34.38, meaning now could be a good time to consider buying the company. With a 20% margin of safety though, acceptable buy price of $30.56, meaning it's still not within our buy range. Now, just because a company falls within your buy range doesn't necessarily mean it is a company you should consider buying. You want to look at the company's long-term prospects and see if it fits in with your investment philosophy. For me, a company like Walgreens does have a high starting dividend yield, relatively low payout ratio, but the growth prospects are just so low, I don't really see it fitting in with my long-term goals for my portfolio. I'm looking for companies that are going to be able to continue to increase the amount they pay in dividends year over year. And while Walgreens does have a rich history of increasing their dividend payouts over time, those dividend increases are slowing down by quite a bit. Obviously, we saw dividend growth rates of around 2%. And with the free cash flow growth rate we're projecting of just 1%, I do have questions of a decade from now, will this dividend be sustainable? For me, I want to invest in companies that I can be comfortable knowing they are going to be able to pay dividends for many decades to come. So personally, Walgreens isn't a stock I'm really considering right now. I think it could be a good value compared to its intrinsic value, but it just really doesn't fit in with my investment philosophy. So there you go. There's a quick analysis on Walgreens stock. If you'd like to be able to download this spreadsheet, then you can head over to my Patreon page at the link in the description. So that being said, thank you guys so much for watching, and please don't forget to like and subscribe to the channel.